In the third video relating to theory base of accounting, we will be discussing materiality principle, prudence principle, cost concept, revenue recognition concept, matching principle, dual aspect, and verifiable objective concepts. Now the first one today we are going to discuss is materiality principle. Now according to the materiality principle, all informations or material facts should be recorded in the books of account, and the items which are not very important for taking decisions while taking decisions may not be recorded or presented separately. Now the materiality of the items will depend upon the nature and the amount involved. Let's take one example of paperweight. Now the paperweight can be used for many years, but the amount involved is very less. So we are not going to capitalize the purchase of paperweight. It will be treated as a revenue expenditure. Okay. Now see the nature, the machine, the paperweight will be used for many years, but the amount involved is so less that it is immaterial while calculating profits or while taking decisions. So instead of treating it as a capital expenditure, we are treating it as revenue expenditure. This may be the same case regarding all the stationery items like stock of eraser, pencils, scales. They are very small amounts. They can be used for a longer period of time, but we are not capitalizing them. It is because of the materiality principle. See, it is written, no, last stocks of eraser, pencil, scales are not shown as assets. Whatever amount of stationery is bought in an accounting year is treated as a expenses, whether consumed or not. Next one, prudence or conservatism principle. Now this principle helps to present the realistic picture of the business. According to this principle, the management will record the anticipated losses. That means in future the business may incur the loss, but till now it has not suffered any loss. In the same manner, any anticipated profit will not be recorded until it is realized. I am repeating again, anticipated losses will be recorded, anticipated profits will not be recorded. This application of this the application of this concept presents a more realistic picture, and it helps the business to prepare itself for any worst situation, like the valuation of stock at the end of the year. The cost price and the market price is compared, and the stock is recorded at a value which is lower. Okay. Cost or historical cost principle. According to this principle, assets are recorded at the price at which they are acquired. That means there is a bill receipt is there, or invoice is there, and the amount which is recorded in the invoice, at that price the machinery or the assets will be recorded in the books of accounts. Okay, I am repeating, according to the cost concept, an asset is recorded in the books of accounts at the price paid to acquire it, and then it is systematically depreciated in the subsequent years. See, okay, asset is recorded at the cost at the time of its purchase and is systematically reduced in value by charging depreciation. The market value of the asset may change with the time, but it will be always recorded at book value, that is cost minus depreciation. Revenue recognition concept. Now according to this concept, revenue will be recognized as soon as we enter into a transaction and there is an obligation to receive the payment. Like credit sales are recorded, no, the person have not paid the amount, but he will pay it on a later date. So revenue will be recognized as soon as the ownership is transferred. Okay, when we have delivered the goods to the customer, it will be treated as revenue. Now there are two exceptions. Okay, first, sale of goods under hire purchase. Okay, hire purchase, that means all the installments will be considered as hire or rent until the last installment is paid. Generally this system is followed in the purchase of very expensive assets like aeroplane, okay, or JCB machines and all. So the installments paid in the beginning will be considered as rent, and when it is paid at the end, it will be the last installment will be treated as the payment of the cost, and then the ownership will be transferred. Similarly, long-term contracts like construction of dam, it is spread over a year of 4-5 years. So proportionate amount is recognized as revenue. Matching principle. Now, according to this principle, to calculate the profit and loss, all the expenses which were incurred to generate the revenue will be recorded in the same year in which revenue is recognized. I am repeating. We will record all the expenses which are incurred to generate revenue in the same year in which the revenue was recognized. It will help the business to calculate the correct profit or loss. It is not relevant whether the payment was made or not. Okay, whether the expenses were paid or not, it is of no importance. Okay, the revenue is recognized, and the expenses which are incurred to generate that revenue will be also recorded in the same year. Okay, that's why the prepaid expenses and outstanding expenses adjustments are made. Dual aspect principle. Now from the name itself it is clear, no, dual, double effect. Okay, for every transaction there will be minimum two effects, at least two accounts will be debited for every affected. Okay, at least two accounts will be affected, and for every debit there will be a equal credit, or vice versa. Verifiable objective principle. That means every transaction has to be verified or evidenced by certain documents. Like when you are depositing money in the bank, you fill in pay slip and the bank stamps that and gives to you. In the same manner, when you are purchasing something, you get an invoice or a bill or cash memo. So every transaction should be supported by one or the other documentary evidence, and with the help of that documents only the transaction should be recorded in the books of accounts, so that no personal bias is there. Okay, holds that measurements are based on evidence, and all the transactions should be supported by one or the other business document like cash memo, invoice, bills. Okay, and with the help of these documents only transactions will be recorded in our books of accounts.